Hi everyone, I'm Matt from Looking to Bitcoin, and today we're going to be looking at Ethereum. To do this, we'll be using a number of resources that are all freely available on lookintobitcoin.com, your number one source for Bitcoin information. If you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So if you weren't already aware, within the cryptocurrency space, there is not just Bitcoin. We have other cryptocurrencies, altcoins, as some people like to call them, and there are thousands of them. And each one of them is claiming to fix a problem that wasn't previously solved. Now, do a lot of these cryptocurrency projects solve problems that needed fixing? No. Do they actually solve the problems they intend to fix? Not really. However, that doesn't stop people trying to create their own, potentially for the good of the world and for morals and ethics, but other times potentially just for a little bit of money. But regardless, there are many cryptocurrencies out there that are genuinely good projects that are bringing innovations to the space and are providing value to a lot of users as well as traders and investors. And the second biggest cryptocurrency within the cryptocurrency space is Ethereum, which has been around for a long time now and is the second largest by market cap. And on the Bitcoin price live chart we have here on lookintobitcoin.com, we can actually see the Bitcoin versus Ethereum ratio. Now, what this is showing us is how much Bitcoin you could buy with one Ethereum. So right now it gives us a value of 0.0689, which shows you could buy around 1/14th of a Bitcoin with one Ethereum right now. Or if you were to sell your Bitcoin, you could probably buy around 14 Ethereum with that one Bitcoin. But we can see this price is constantly changing. As there are multiple different cryptocurrencies, a lot of them are very correlated with their price action. However, there are times when many of them will far outperform Bitcoin. However, there are many times where they'll far underperform Bitcoin as well. So a lot of them may just provide more volatile and speculative correlated returns to Bitcoin. Some of them are a little bit more uncorrelated, and some even provide other functionalities such as correlating the price of gold, such as Paxos, or correlating and tied to the price of the US dollar or other global currencies such as US dollar tether, USDT. But Ethereum is similar to Bitcoin, but there are some stark differences which we'll discuss today. But ultimately we can see here, along with Bitcoin, these other cryptocurrencies can actually be priced out not only against the US dollar but also against Bitcoin. So if we just go into coin market cap here, we can see the actual price of Ethereum is around $1,700, and this is where we get that ratio figure we saw before, where one Ethereum would buy 1/14th of a Bitcoin and vice versa. But we can see the market caps don't quite line up with that 1/14th value, and that's because we need to also take into account the circulating supply. Now, this is the amount of that cryptocurrency token currently in circulation. So we can see there are over 19 million, about 19.2, 19.3 nearly million BTC in circulation. But we can see there's over 122 million Ether in circulation right now. And this is where we get these market cap valuations, because when we're actually pricing up cryptocurrency assets, we can't just look at the underlying price. We need to factor in the amount that are actually in circulation, because just because something is valued at $1, you can't immediately say that it has the potential to go to $20,000 like Bitcoin did. You have to take into account that if it has billions in circulating supply, that it likely never will ever reach values that high, just because then the market cap would far exceed the total market cap of all global assets combined. So really you need to factor in the circulating supply when pricing in your cryptocurrency assets. But back to the differences between Bitcoin and Ethereum. So Bitcoin was initially created to act as not only a store of value, but a peer-to-peer currency, a decentralized way that people could exchange money without any authorities or third parties being involved, from anywhere across the world to anyone without any borders. Now, obviously, something increasing from a value of around a penny to over $60,000 at times isn't a bad store of value. Obviously, there are some fluctuations along the way, but it also serves as a peer-to-peer currency. Now, this is certainly up for debate, because at certain times the price to actually send a Bitcoin, the transactional fee, can be a few dollars, which of course if you're sending tens of millions of dollars worth of Bitcoin is a fraction of what you'd pay to either transfer US dollars or any other global currency or any hard assets such as gold. But if you're just trying to send a few dollars at a time, you don't really want a substantial portion of that transaction being eaten up by fees. Now, of course, there are alternatives to just using outright Bitcoin, such as the Lightning Network, which is providing a layer 2 solution, which means it operates on a separate network from Bitcoin, but then we still aggregate those transactions onto the Bitcoin network. And these provide almost instant and free nearly transactions that can be operated on Bitcoin. So we have to also bear in mind that Bitcoin as an asset class can be evolved. It is a piece of software that is constantly being developed, as it's an open source project, and it is constantly being improved with new features being added. But how does this compare to Ethereum? Well, initially we opened up on the hash rate chart here, and this is because Bitcoin operates using a proof of work consensus. To actually mine the new blocks, to actually allow new transactions to enter the blockchain, we have lots of miners, as they're called, using their computational power or their hash rate to actually compete to mine the new blocks, because whichever miner can actually mine the newest Bitcoin block receives not only all those transaction fees we discussed, but also a mining reward for doing so. So if we quickly just transition onto this chart, you can see here that every day Bitcoin miners are receiving currently around 800 to 900, maybe 1,000, depending on current difficulty and hash rate, in mining rewards in Bitcoin denomination, which each block 6.25 as it currently stands is around $150,000 in Bitcoin. So certainly not a small amount of money as a reward for mining the blocks. And this competition for blocks actually secures the network, because as everyone is mining for these blocks, we actually then look to what are called Bitcoin nodes that verify all the transactions are true and no one is trying to double spend or use funds that they don't have. And as every miner is only contributing a few percent towards that total hash rate value, it's very unlikely that any one of them could actually control the Bitcoin network. By doing so, they'd require 51% of the total hash rate, which is about as much computational power as an entire country, before they could actually start changing blocks, before they could start adding in their own transactions, because they would have a control of the majority of the Bitcoin hash rate. So Bitcoin works as a proof of work consensus to try and act as a store of value and as a peer-to-peer currency. Now, what about Ethereum? So as I said, there are a lot of similarities, but Ethereum is trying to act slightly different and actually provide utility to actually build projects on top of it. So if you imagine Bitcoin as a digital gold, which is where a lot of comparisons come from, a lot of people refer to Ethereum as a digital silver, as silver is useful metal for building batteries and such, or even the reference of a digital oil, as it actually allows the utilization and the power of different projects. As Ethereum utilizes its own blockchain, what it actually allows is people to write their own lines of code, create tokens that actually operate on top of the Ethereum blockchain. So if you almost imagine Ethereum as an operating system that allows other pieces of smaller bits of software to run on top of this and actually provide functionality in different and unique ways. It also allows for what are called smart contracts. So rather than requiring a third-party intermediary to actually mediate the terms of a contract for a certain transaction or transferring of ownership, we can actually code into the actual Ethereum blockchain the terms of that, create what's called a smart contract where both users lock up their assets, and once both sets of criteria are fulfilled, they are transferred immediately. The smart contract is executed without any potential for malicious players to actually interfere with those transactions. So with this functionality to actually provide smart contracts but also allow other projects to build on top of Ethereum, we also need to consider that Ethereum has recently transitioned to what's known as a proof of stake consensus. So it's actually mined a little differently to Bitcoin. So if we go onto a block explorer such as BlockCypher here, we can see Bitcoins, as we discussed before, are mined, and about every 10 minutes they come through with a number of transactions, such we can see here. So about every 10 minutes, as here, or 30 minutes before that one, or just a minute before that one, we see these Bitcoin transactions coming through containing all of the transactions of that recent block. But if we look at Ethereum, these transactions are actually coming through significantly quicker. Every few seconds, every few minutes. It's a much more frequent system for actually utilizing the network. And it accomplishes this by using, as we said, a proof of stake system. So rather than people putting in their computational power to try and mine the blocks, Ethereum uses this proof of stake where people actually put their ether into staking. So if I had, say, 32 ether, I could actually stake that and try and act as a validator on the network. So every time a new block comes through, the Ethereum network will choose a validator based on how many Ethereum they're actually staking. So the more ether you actually stake, the higher your chances are of being chosen to be the validator. And then that validator acts alone to actually validate the block and all of those transactions within. Now, this proof of stake system has its benefits and drawdowns. So compared to a proof of work consensus, The actual energy usage is substantially lower because we don't have multiple miners competing with computational power to mine the blocks. We have people putting up their ether for staking for the hopes of being chosen to be the next block validator. However, this does lead to a few potential issues with the potential for centralization, with the high entry requirements for actually being involved in this compared to Bitcoin, where anyone with a computer or even a mobile can compete in the computational effort to mine the next block. And also due to the fact Ethereum, when it was launched, had a number of tokens allocated to certain founders and developers on the project, so it isn't quite as decentralized as Bitcoin with its anonymous founder Satoshi Nakamoto, who after creating the project let it be a completely open source development without a closed source team of developers making the decisions on how the project should move forward and evolve. So just to summarize, Ethereum is a cryptocurrency like Bitcoin, although you have to keep in mind its purpose, utilization, and functionality do differ fairly substantially. And along with Ethereum, there are thousands of other crypto projects that are created to provide certain features that potentially weren't readily available on the Bitcoin blockchain, such as smart contracts and decentralized applications, or to operate as a base layer for other projects to act on top of. There is also the fact that we need to acknowledge that Bitcoin runs using a proof of work consensus, whereas Ethereum is using a proof of stake consensus, so there are slight differences on how these networks actually process transactions and keep a decentralized and fair peer-to-peer currency. But ultimately, we need to acknowledge that these are bits of software, these are bits of code that are constantly being tweaked, developed, added to, and upgraded to constantly provide the best functionality available. So while Ethereum right now may provide certain features and functionalities that aren't currently available on the Bitcoin blockchain, that certainly does not mean that at some point in the future, be it in the next few months or next few years or decades, they won't be available on the Bitcoin blockchain, as people are constantly trying to upgrade the Bitcoin network and upgrade it to be as functional as possible. So as discussed, whether you use these alternate cryptocurrencies, whether you trade and invest them, or whether you just stick to Bitcoin, we need to acknowledge that some healthy competition is always good for the longevity of the space. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to live chats, in-depth newsletters, indicator alerts, private TradingView scripts, and more, or for a fraction of the standard industry price. You can also come to the learning section we have here on lookintobitcoin.com to learn all the ins and outs of Bitcoin as a technology and the network that is built upon. And let me know in the comments down below what your thoughts are on Ethereum, other cryptocurrencies, and just the crypto market in general. Do you think it's healthy for the space to have lots of incoming new cryptocurrencies, thousands developed every year, or do you think we should really focus on just Bitcoin or just a small handful of crypto projects? Let me know in the comments down below and on social media as to what your thoughts are. I look forward to reading and replying to all of them. Thank you very much for watching, and I'll see you in the next one.